It's Monday, and things aren't going crazy. Thank God. But seriously, after a volatile couple of weeks, it is really nice to see markets starting to get their footing. Key indices are continuing to climb, and many charts are printing bottoming patterns. Also, tariff-related rhetoric out of the White House is having a diminished impact on markets. We saw that between tariff exemption announcements on Friday and then the recension of those yesterday. Looking back a week, that would have thrown things for like 10-15% swings, and the market actually opened green today. We have statistics in our favor. Historically, April's and holiday weeks in general tend to be green, so let's hope those trends continue. If you do need some excitement in your life, there's still plenty of madness out there. Things like Ulm, a cryptocurrency out of Dubai, crashed 90% over the weekend. I won't get into the details, but basically one party sold $12.5 million, and it caused cascading liquidations, bringing down almost the whole project. Janover, stock that we discussed last week that adopted a Solana reserve strategy, is now up a whopping 1,600% since announcing that. And Webull, after its IPO, I measured bottom to top, it was up 666%, has retraced a little bit, but I knew not to trust IPOs. You do not chase them. I think the 666 is a confirmation. Although I think it's good luck in Asian cultures. So anyway, even with things settling out, there is always plenty to discuss. So join me as we dive into the macro and look at key charts for swing trading stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome to the Trading Apologist. My name is Tom, and I hope you all are having a lovely start to the holiday week. Now, before we dive in, if you could like, comment, subscribe, that would mean the world to me. We are now officially at the start of week 3 of this project, and nobody's watching. Anyway, I won't cry about it, but if you could do that, that would mean the world to me. Now, today I'm going to focus on a few key charts. I'm going to look at names with relative strength and those that are printing reversal patterns. There are a lot of inverse head and shoulders out there, so we want to identify those names so we can still get in on a swing trade and we know what the invalidation level is and what our target is overhead. Before we do all that, I'm going to set up a clean chart, and I just want to show you guys how I set up TradingView and what the indicators are that I use. With a holiday on Friday and Monday and the markets being closed, I'm going to focus the next couple of videos on trading strategies I use. And on Friday, I'll focus on crypto trading for Cashflow, how to long and short perp trade to generate extra revenue. So in January, for example, I set myself a challenge. I said, hey, can I turn 10 Solana into 100 Solana perp trading? And at the end of the month, I was able to turn that 10 Solana into 200 Solana. So exceeded my goal. I won't tell you how much I made, but you can go back and calculate the price at the time, and suffice it to say, it is a worthwhile exercise. That aside, just a quick PSA, we are still in a volatile trading environment. Even though things have settled out from the news the last couple of days, we are far from being in the clear. So remember to manage your risk and your position size appropriately, have your stop losses in place, and be ready to adapt to a changing market environment. I think we're going to continue to see chop and rapid changes from uptrends to downtrends, so you need to be ready to capitalize on that. Lastly, I know a lot of you are looking to understand how treasury bond yields impact the markets. Now, I covered that in detail in Friday's video, so if you are interested in that, go back and check that out. It's just after the intro, and you can understand that relationship and how it's been inversely correlated, how it's been more correlated recently. But today, the 10-year bond yield did fall quite a bit as tensions start to settle, so that was a good sign. We still have more work ahead, but again, we'll take any signs of hope. Okay, looking really quickly at Forex Factory, we don't have too much on Monday and Tuesday. Yeah, we have some CPI coming out of Canada, but no one really pays attention to Canada. Sorry, Canada. On Wednesday, we have core retail sales coming out of the US. That one's going to be important because consumer confidence has been in the toilet, so I think the market's going to be watching this one. And then on Thursday, we have unemployment claims. Again, you can set Forex Factory to correspond to your time zone. This is 2 hours off of my time zone. Don't ask me why, but that's the choice I made, and now I have to live with it. Moving on. Okay, last thing I'll say before we jump into TradingView, we are entering earnings season, so be sure to mark that up on your calendar for the names that you're invested in and those big ones that can really move the broader market or sectors. Also, we were getting into stock buyback season, which was projected for the US to be $1 trillion in buybacks. However, that number has been reduced to 250 million, so we won't have the same tailwind of buybacks, but there are other monetary easing tailwinds that we do have coming up, which we discussed in past videos. Anyway, all that aside, let's get into the charts. trading view here, and I'm just going to open up a new tab, create a new layout from scratch. By default, it gives us Tesla, which is fine because it has a lot of volatility. We're going to start on the daily. I'm going to keep the volume down here because I like seeing the volume for each bar. And then the other volume indicator I'll add is the VRVP, Visible Range Volume Profile. I've got it on my favorites there. And this just shows you the volume within each range, and they changed the colors. Oh man, this looks like, I don't know, a box of Nerds or Skittles or something, but that's not what we want. Let's go back to the normal colors. All right, so I'm just gonna go to settings. First thing I'll change is the row size. I like to do 150 for the row size, so we get more detail within each range. And going back to the settings, don't know why I closed that. Width, we'll just do 20 so it doesn't impede on the chart so much, and we'll just change our colors back to the normal blue, normal yellow, normal blue, normal yellow. This is what it used to be. Okay, that feels more like home. All right, so this just shows us where our volume clusters are and where we can expect to see support and resistance. And as you can tell, that 150 range has been key support and resistance on Tesla. And wouldn't you know, there's a big volume cluster there, and there's another one around 220. Guess what? Where we also found support. All right, let's add the rest of the indicators. The other one I always have on there is the 200-day. This is the most important moving average in my book. Again, I'm going to change the color because I like it bright and I like to see it. So we'll make that yellow, and we'll take down all the transparency. And last things from just generic indicators, I like the RSI. So we'll put that on the chart. And then stochastic. Now, stochastic RSI, I only use on either really big, like week-long time frames, or really short 1 to 5 minute time frames when I'm perp trading. And like we talked about on Bitcoin last week, every 6 months we get kind of that stochastic, positive stochastic RSI cross. And we just know it's not an exact science, but momentum is shifting, and hey, we might be entering an uptrend again. Likewise, on the 1 and 5 minute charts, it'll just show you that momentum is shifting, and you're probably going to get a few up bars before another turn down. So if you're really in there trying to scalp or do high leverage perp trades over just a couple minute time frame, this can be a great tool. Now we'll get into the invite only indicators, and I'm just going to go back to the webcam really quickly. I'm going to add the subscription indicators now. So these are indicators that I pay for. Most of these tools are from Invest Answers. You can find these at investanswers.io. I'm not getting paid to say that. I have no affiliation. I just really like the tools. I think they are some of the most well thought out and comprehensive tools on the market. The back tests are great. They have a whole research and development team behind them. Again, no affiliation, but I've tried lots of different indicators, and these have proved to be the most effectual for my trading. So if you want to check them out, investanswers.io. Even if you don't check him out, I would highly recommend following his YouTube channel. The information and alpha you can find there is some of the best I've found on the internet. So anyway, enough of that shill, although I'm not getting paid, so it's not a shill. Anyway, enough of that. Let's go back to TradingView. All right, so I'll go back to indicators. Instead of the main search, since these are invite only, I'm just going to add them here. So I am going to add the confluence model, and I am going to add the mean reversion tool, the trend model, and for fun, I'm going to add the TIA Gann swing indicator because I do a lot of Gann swing analysis. This is a different tool, not from Invest Answers, but from TIAcrypto.com, Jason and Mick. So that's another wonderful tool that I like to use just to get a visualization on the swings. Again, since we're not using the stochastic RSI all the time, I'll move that down to the bottom and I'll compress it for now just so we have it in the background. Here we have our mean reversion tool, which is very helpful. Remember, everything reverts to the mean. So this can tell us when things are way overbought. Nailing bottoms, we have confluence there with RSI. Anyway, we can get into the details later. We have our RSI. I'm just going to go into settings. I don't like this moving average for the RSI. It doesn't really do anything for me. And last thing we'll talk about is the confluence model. So we have a couple things here. We have the trend indicator, which just shows if you're an uptrend in blue or a downtrend in orange. And one thing I like to do with this in the settings as well is I like to just change the transparency because I want to look at candles and see my charts in details. So I'll put both of these at 30, but you do whatever you like. And then these border lines, because charts already get busy, I turn these border lines totally off because we're really just seeing which way the trend is moving and when there's a potential break in trend. So could there be a turnaround here? No, we had an invalidation. Looking at that trend. Okay, next is the confluence model. So the confluence model is exactly what it sounds like. It brings in 22 different indicators, and when there's confluence amongst them, it gives you these sell signals, or we have to go back in time a while, or these buy signals when all the different indicators are firing. Now you could add all 20 indicators to your chart, or you could check them manually, but that would take a lot more work. So I like using this. And what we're looking for turning points, like on this sell signal here on Tesla near the top, we're looking for a sell signal. We're looking for mean reversion to be 2 standard deviations away from the mean, which we were here. And then we're looking for the trend to change. So when the trend here changed to orange and you had the hard sell signal, this means not all the indicators are firing. And we have this cloud here, which is very much almost like Bollinger Bands. We also dropped into this cloud, the trend changed. You had everything telling you, also RSI, which is just a standard indicator saying that you were overbought. You had everything telling you this trend was turning. So you would have gotten out there at 425, and now we haven't gotten a signal to get back in. So this is just a great tool that makes your trading journey a lot easier. The last thing I'll mention on the confluence model, and we'll get into this more, is that you can really dial in the settings, and it has this back test here, which is fantastic. So it tells you the win percentage for your current settings of the buy and sell signals. Right now we're at 100%, which is fantastic on the daily time frame. If you change your parameters, obviously that will change as well. If you go to settings, you can change your bias, which is the main thing we're going to look at, but you can also this back test if you don't want it, which I don't use for perp trading. I use it for longer swing entries. So we can turn that off and on. We can change the position of it. You can change your entry type to current capital in, percentage of capital in. You can change between FIFO and LIFO, all these different settings. But if you do end up getting these indicators, there's lots of support in the community and you can really dial all that in. I'm going to turn this off for now because I really just want to look at the cloud here. And you notice you can change your settings to bullish, or you can change them to bearish or neutral, depending on the trend you're in. So this really depends on the asset you're looking at, and something that moves violently like this, like Tesla, I have generally had the bullish setting turned on, and you can see once we break out of the cloud on the upside, we usually retest it for support, and then when we break back in, that's an earlier indicator as well as this signal, and then we test it from the underside before we break down, and then our trend flips. And again, we had the confluence of the mean reversion and RSI. So all those are telling you that it's time to get out right there. The same thing works on the buy side. So that works well when we're in an aggressive uptrend like we were for a lot of last year. But say now that we're in a downtrend, maybe I want to switch this to neutral and I want to see where potential support might be coming in on the cloud. And we can see when you switch that to neutral, that meets up right there. And this also changes your sell indicators. You'll notice when you switch to bullish, you can see the sell signals were the same, but you also got a buy signal right here on bullish, where on the neutral setting, you don't get that. That's just something to pay attention to know what trend you're in, to backtest this and see what really works for you. Now, the last thing I'm going to say, we're leaving this on neutral right now. The thing I like to do for perp trading, which we'll get into on Friday, I'll add 2 instances of this. And so we have 2 matching instances right now of the confluence model. And what I'll do in the settings, I'll turn the back test off. I'll set the top one to bullish. And for the style, I'll set the lower line to a thicker bar type. And then this one under settings, I'll change the top to a thicker bar type. And I'll switch this one to bearish from neutral. And then we'll also turn off the table. And you can see now you have both clouds, whereas the neutral would have been somewhere in the 50% range of these outer bands. Now you have these 2 bands to play with that give you more reads on potential support levels and resistance levels in between. So the neutral, again, you can just kind of judge the 50% between these levels is where the neutral one would be, which was giving us support. But you can see that this is now proving to be resistance. And as we break through that, that would be our first challenge to get momentum as we approach the 200-day moving average. Anyway, I'll get into a lot more detail on this on Friday and how I use this on smaller time frames. But that is the basic setup there for how I use all these tools. And this is the general blueprint that I will have up on every one of my charts. There are some, specific tools I'll use on the Bitcoin chart, like the M2 money supply or the 365-day moving average. But as a general baseline, this is what I like to go with. Trading view setup done. Let's get into the normal charts. So we will start here on the S&P 500. And we're going to start on the smaller time frames because we looked at the larger time frames on Friday. And really today we opened kind of up here at 54 and change. And we had this gap up, and I had a feeling that this gap would get filled. And so even though we started the day positive, as we started to see that turn, I actually use this as an entry signal on a short for Solana because crypto during the market hours kind of moves in tandem with the markets. And it gave me a nice little short entry, and then I was able to get back in on a long perp. But again, we'll get into those details on Friday. So we ended the day, down a little bit, but fairly neutral compared to these big swings we've seen. I mean, if you just look at the types of candles that we historically see, and then the candles from the last week and a half, one of these does not match the rest. I'll let you guys figure that out. But we've had this little underside support that I've been watching just as a very small time frame indicator. I wouldn't be surprised if we break that before bouncing back through. Then we have this overhead resistance. So we have to get through this diagonal overhead resistance. We're coming right back into the 50% level. So this huge historic candle that we saw that shot right back into the 50% and then retraced. That area and these previous lows are going to continue to provide resistance for us. And I have a feeling we'll test that this week and potentially break through. We still have one more gap fill here at just under 5,600. So that would be my near-term target. Maybe we even hit it tomorrow and we test this downtrending resistance. And then I could see us pulling back a little bit, building some structure, and then going up to test higher levels. If we do continue up, 5,800 or 57 to 5,800. This is really our next range. We built a lot of structure here after this pullback. And so there are going to be sellers hiding here. We have that 200 MA. So this zone right here, I'll just draw it out with the marker. This zone right in here, 57 to 5,800. That is going to be our biggest hurdle after these short-term downtrending resistance and the 50%. So the S&P has some work to do, but again, look for those names with strength, and it's not too late, even though we've had a big recovery, to position in some names that still have good upside potential, and just, have your stop losses set and know where your invalidations are for those entries. Just switching briefly over to the NASDQ. And if we go to the NASDQ on the daily, you can see that there's actually slightly more strength in this chart. Today, we already tested that downtrending resistance. We have broken back into this range here. And tech has been recovering a little faster after the tariff exemption news. So I suspect this is just the tech-heavy NASDAQ. This is just the tech-heavy NASDAQ leading the charge a little bit. And look, we're starting to get some buy signals printing too, and the trends, which I have turned off. Oh, I don't even have the trend turned on here. Oh, and the trend is just about to flip. So we'll have to keep an eye on that one. Anyway, I'm going to turn that back off because I don't want it here. Moving on to the HSI, the Hang Seng. This one has still been showing relative strength. I'm just going to turn off the trend model so we can see everything. We still have this gap fill. I'm just going to set an alert right there. But we had a little bit of a gap up today. This to me is showing surprising strength considering that the White House said on Friday that they're considering delisting Chinese stocks. Just to recap, I did mention that I got out of my BABA position on Friday, and that was purely based on the news. I mean, all the charting would tell me that we're going to go back up here to 125. I got in at like $96 to $98. So that would have been great upside. But when those announcements came out on Friday, it was just too much risk for me holding into the weekend, because if Chinese stocks did get delisted in the US, there would be huge sell pressure from hedge funds and institutions that would need to unload their shares. On the DXY, we continued to break down. Now we had a little bit of a bounce back up, but we're right into what used to be support, now playing resistance. If we go out to the weekly time frame, I think it's just worth talking about this. After this big breakdown at the end of 2022, this really, to me, was the start of a bigger breakdown in the US dollar. But this consolidation range and this rally lasted longer than I thought, but I think we're still going into that macro downtrend of the dollar weakening. This move here over the last 2 weeks has been abnormal, and as we always discuss, the market doesn't like abnormal moves. So I wouldn't be surprised if the dollar got enough strength to break back into the range, but then we have this resistance zone, and perhaps we break down from there. So something like that wouldn't surprise me. Again, we have 103, which would be a very strong resistance, or this zone right here between 102.4 to 103.5. So watch that area, and that's just what to expect from the DXY. We're going to skip over oil because it's not doing too much, but I am just going to pull up natural gas real quick on the daily time frame. So natural gas, I got into a position right around here. Because we had this a huge breakdown after COVID on the natural gas prices, and then kind of a consolidation. It tried to rally and then broke down more. And then this was our sign that this was the first higher low that we saw in months. And I watched this rally and then watched it come back and set a macro higher low. And that was my indicator that, hey, it will probably be back on for natural gas. If you were really aggressive, you could have gotten in here. But I rode this for a good while. I actually got out on this breakdown right here, so I missed the top, but still not bad profits when you're holding BOIL, which is a 3x ETF. But we had this clear hammer reversal, and now, you guys seeing what I'm seeing? We have our neckline here. We have a very clear head and shoulders. So if you're just mapping that out from the neckline, if you don't know how to measure head and shoulders, you take this center of the pattern on the head to the neckline, map your breakout. So that would give us a target right around here. And, I didn't measure that exactly. And neckline's probably more like right there. And wouldn't you know, if you draw a horizontal trend line just as where we put that target, and we take that back in history, lo and behold, that is right with these volume clusters, right where we got support here. So that would be a very fair target for me on natural gas. And if you want to go short with COLD, that's a 3 times short natural gas ETF. That could be a fairly profitable trade. And you know that if you break back above this neckline right here at 380, that's your invalidation. What I'll be doing is I'll be watching for a bounce back up to get a better entry on a short, and then I'll be looking to ride that down to that price point right there. Just going over to gold. Gold did not do much today. It just kind of consolidated at its previous high from Friday. But again, this was one of the biggest daily candles we've ever seen on gold. Yes, it could continue to rip to that 3,600. Now retail is in the trade, so be careful, and be careful of this blow off top potential. We could overshoot when things go parabolic like this. If there are more fears that come out, yeah, we could overshoot, but anywhere in here, if I was watching this and I was already in the trade for a couple of years, I would have been scaling out already, because things can't last like this. And just to recap, we always talk about that blow off tops are not sustainable. So if we go up here, we're going to have an aggressive drop, and then I think we're going to have some kind of equilibrium where gold finds its footing again before getting on its next move. But gold can consolidate for a long time. It did nothing. If we go back out to the monthly, it did nothing for like 10 or 15 years. And then we had a run up, more consolidation, and then the last couple of years, it's been on a tear. That's it for the shiny rock. Silver had that dramatic drop. We've had a good bounce back. We're into some resistance levels now. If gold continues to rally, I think this will do okay. But again, gold is the leader. If we break out from this double top, I still think 45 could be a target for silver. Okay, we're here on Bitcoin, and I'm just going to cover some of the key things we talked about from Friday. So we had that double bottom here, 1, 2 on the daily. Again, it is more clear on the 4 hour. We had that double bottom, and we broke above this 10-week downtrending resistance. We retested it for support over the weekend, and we're starting to break away again. We do have this resistance overhead at 85 right now, and we have the 200 MA, but the target from this double bottom is still that 87K, which is right with the 200 moving average. So that 200 moving average is really what I'm watching. It's a great sign of strength that that downtrend is broken. Getting a weekly close above this downtrend will give us more confirmation. Again, tracking our M2, we could definitely have more chop, and right around here in early May is when I would anticipate a breakout point just based on M2. But we have very clear things to watch on Bitcoin. Again, getting above this 85, and we're targeting that 87 from the double bottom pattern. That's it for the short term. Long term with M2, I'm still bullish on this as a flight to safety, with gold having rallied already and having its blow off top. As we've tracked gold over the last couple of years, generally gold and Bitcoin, for whatever reason, have not moved at the same time. On Solana, we also broke that downtrending resistance. If we go into the smaller time frames, we actually have a bit of an inverse head and shoulders here. It's not the prettiest in the world, but you can see head, shoulder, and we also had a breakout of that neckline. And that target for the breakout is right at $150, which incidentally is our major resistance overhead. We have $150, which you can see played all this resistance here, and then $180, which is right at the 200 MA. It's crazy how this stuff lines up. But those are our two major resistances overhead. So I think Solana is still generally moving to that 150 target, and then we'll probably have a bit of a retrace because some of these charts, on the 4 hour, you can see we're already getting up there on the RSI. On the daily, let's see, we still have a little bit of room to run on the daily, and it's respecting these bounces here. So 150 in the near term, probably a pullback. But again, Bitcoin is the leader. And look at that. Look at the volume right there. 140 into 150. It's our biggest volume cluster. So you can see where we've got our work cut out for us. But in the short term, we broke that downtrend. So good signs. Okay, moving on to the Fartcoin chart. And I can't believe we're talking about this one, but this is the world we live in. No, it's just been respecting the levels so well. And it's been one of my best trades the last couple of weeks. So you can see we have a very clear cup and handle. And the way a cup and handle pattern is measured for the price target, once you have the breakout here, you measure the bottom of the cup to the top of the cup, and then you simply take that and you put it to the breakout point. And wouldn't you know, that has us targeting just about that resistance. So we're at like 110 right there for the target for the cup and handle. So there's still a little bit left to run on it. Again, like Solana, on the daily, we're starting to get overbought. On the 4 hour, same thing. Mean reversion has already started to come down. On the 4 hour, I suspect if this shoots up, we're going to make lower highs on the RSI. So we have a bearish divergence. So it's definitely close to time to get out on this one. But then we'll have a retrace and you can look for other entries. The only reason I mention this one is because it respects the charts so nicely. And I was able to get into a long position before the weekend, ride it up, and now I took half of it off. I'm in a risk-free trade. I'm seeing if it still goes up here, and then I'll exit the rest of it. Just clean chart, easy to trade, and if you know what you're doing, you can make some great profits because these are huge swings. Even this pullback here, this looks like nothing. I think that was close to a 20% pullback. Yep, 20% pullback. So anyway, lots of volatility. Volatility can be vitality if you're a trader. Otherwise, it can be stressful as hell. Okay, speaking of volatility, great transition into MicroStrategy. So MicroStrategy has not broken its downtrending resistance yet like Bitcoin has, but it did show a lot of strength today compared to the rest of the market. It moved up to almost 315. That resistance line, let's say if we hit it tomorrow, is at like 316. So that's one to watch if we can break out here. But MicroStrategy is another one where, okay, cleaning up the chart a little bit. MicroStrategy is another one where if you go on the small time frames, you could make an argument for an inverse head and shoulder. So you can say shoulder, head, shoulder, breakout point. If you measure that, that takes us up to about 170 for the target. So that would correspond to this line right here. So watch this downtrending resistance on MicroStrategy. It was showing more strength than Tesla. I've been pair trading, swapping between the two. I moved a little bit of Tesla back into MicroStrategy, just for this move. And then if we hit that 170 target, I would swap back to Tesla, and hopefully Tesla doesn't run between now and then. And that chart has been a little bit weak. Okay, so we'll just get into miners really quickly. I didn't even want to really spend time on these, but just note that CleanSpark, this underside support's been respecting it. It's been consolidating, and it's trying to move upwards and potentially break out. So keep your eye on that. And Marathon broke its downtrending resistance here. There's been more strength in this. Again, it was a great NAV premium value. You were getting the company for free and Bitcoin at a discount down here at a 7% discount. So this one's starting to move. I think it's one of the stronger miners just because of how undervalued it is right now. One to continue to keep your eyes on. Okay, just looking at Celsius real quickly, it continues to drift upward. It retested these previous tops for support. It's breaking through this resistance right here. And if we can get above what we've been saying, that $41 to $42.50 range, it's got pretty clear skies up to almost that $60 range. But the other thing I noticed today, we have the 200 moving average. We actually broke through that, back tested that for support, which is very bullish. So I increased my Celsius position on the back test of the 200 moving average as I saw we were breaking away from that. I didn't nail the exact price. I was at like $36, but added a little bit to my position. If we broke below the 200 MA and below these other supports, you would have a clear invalidation. But I continue to be very bullish on Celsius. I think this is just a consolidation, and we're going to have another substantial run up on this. Deckers, again, this is another one that is potentially printing an inverse head and shoulders. We don't have it yet, but I just put the target, a projected target line here. So if we're taking our neckline and we have shoulder, head, shoulder, and then we come up here and we break that line, that would put the target at the top of this. I drew it ahead of time at 145 pretty much. So this one has been really beat up. It would be great to see that sign of strength and that little rally. And if you caught any of these lows at that long time $94 support going way back here to the middle of 2023, that is an impressive gain. Congratulations if you caught that. If you want a lower risk play, you could wait for the break of that neckline at 119, let's just call it. And then you have your price target. Again, it's not going to go there overnight, but over the next few weeks, it will most likely make its way up to that territory. All right, so on the Tesla chart we set up that's nice and clean. I'm just going to go over a couple of those very volatile names that we mentioned at the start. So the first one is Mantra, Om, and you can just see that huge drop over the weekend. I mean, if we go back to the weekly, it is kind of respecting this support right here. So at least it found some buyers there. But there was so much hype behind this crypto project over the last year plus. This is an example of why you don't go all in on these crypto projects. Maybe you trade them, but if it has terrible tokenomics, I wouldn't even get involved. So that means high concentrations in one person's bag where they could sell a lot and cause a dump like this. This means bad token issuance where there's a lot of inflationary supply coming on the market. All of those things are just relying on a bit of a Ponzi scheme of getting more people involved to continue pumping the token price. And we saw how one person selling 12.5 million, which isn't a big percentage of the supply, freaked out other big holders, and they just started dumping their bags, and it caused these cascading liquidations. And we can just see, I mean, if we're at the top there to the bottom, 93%, just so painful, ending at 37 cents from almost $7 previously. Anyway, this is why you don't touch these things. Just looking at Janover, again, this is the one where they announced their Solana treasury strategy. I had a chance to get in here. In hindsight, I could have ridden it up for over 100% gain, but I have my limit orders down here just because there was that gap fill. I have to respect my own rules. It might run further, but just the mean reversion is off the charts right now. Again, don't chase replace with another asset. I would not be surprised to see a substantial retrace on this. And like I mentioned last week, the last thing you want is to get in at $65. Then we trade, come back to this volume cluster, and you take a 50% haircut. And last one is Webull. This one, they had their IPO last week and it just shot out of the gates. It's retraced a little bit. Again, IPOs are volatile. If you bought the IPO right away and it shot up like this, just expect violent moves, because anyone who is holding the stock and can unload it after they see a 600% gain is most likely going to take some profit. So expect volatility there. I don't touch IPOs. Generally, even if they shoot up, they end up having a big retracement afterwards. So, could we see this down in the couple dollar range in a year's time? Sure. I have a friend who's a very successful stock trader. His rule is that he doesn't touch an IPO for 5 years, because that's the amount of time he wants the market to give it time to price appropriately, to let the hype die down and make sure he's getting a fair value for that asset. I am not that conservative, and there are some things that I'll definitely get into. And if this were to retrace, actually, no, sorry, this is not a stock I'm interested in, but other names that I'm interested in after an IPO, if it comes down and retraces and becomes a very good value in that, 13 to 15 PE ratio range, then I would consider taking a nibble. Okay, last few charts, just because there were requests for this one. Pfizer, Apple, and Broadcom, AVGO. So let's start with Broadcom. Broadcom, you can see, has had quite the bounce, but it's also been very beat up. It was at $250. We got all the way down to $138. And let's just see where we are. We're trying to get above the 200 MA. Let's draw a line here and see if this is something worth chasing. And if you draw that line, you can see we come right into this past resistance. I mean, going way back to June of 24 here. And so this would be one where I would not get into something at resistance, but you could watch this. And if we break through resistance and back test it, coming back to the scene of the crime, as some traders say, that would be a much safer entry. Or if we break through and you want to get in on that first breakout and set your stop loss right below, that would be much safer. But right now, buying into resistance, even though there's a ton of hype on AVGO, I would not do it. Again, react, do not predict. Let's move on to Apple. Apple, I have not, at least in my history of trading, seen Apple take that big a dive so quickly. I mean, down pretty much 35%. Comment down below if you got in at 170, because that is a good value play on Apple. Even though I have not invested in Apple for years, they don't have the momentum they once had. That was a good play. I mean, there to the open today, you were up 25% already. Now, it did open up because of those news of potential exemptions and has since dropped down. We do have this gap fill, which almost got filled at like the $200 range. Maybe we drop down a little lower to fill that. I would not be surprised if this continues to rebound and at the very least in the near term fills this gap at 221. So those are the near term levels. I mean, they aren't innovating, but I don't think Apple is going anywhere for the near term. I would target that for an exit, that 221 gap fill, or this volume cluster here that cuts through everything at like 225 if you get in at a good value level. And if this drops back down, I might be tempted to take a little entry and just ride that back up. Okay, and last one, Pfizer. And this one I know has just gotten so beaten up over the years. Now, this is a dividend stock. I think they pay something like 7% a year. So the dividends are good, but you're also losing a ton of money on the stock. So that's not good. I mean, what was this here? This was December of 21. We peaked at $62 and now we're down at $22. So yeah, you get a 7% dividend, but you also lose 2/3 of your investment over a few years. So that's not great. Anyway, let's see where this is sitting, because it is extremely beat up, and weekly, I mean, we've hit weekly oversold on the RSI 3 times now. So let's just mark the very bottom here and we'll go back in time and see if that maybe lines up with any support levels. And, I mean, kind of some of these past bottoms here. Yeah, actually, it's not a bad level. So if you do want to get in down here, if it drops back down to $21, and you want to set a stop below and see if this rebounds, extremely oversold. You can. Again, I'm not interested. I want to take more disruption plays, but since someone requested Pfizer, I figured I would mention it. Also, generally don't like to play in the pharma space, but that's just a personal decision. Okay, that's it. Took a little bit longer than I thought to get through all that, but there were a lot of charts to cover. I will see you guys all on Friday for something a little different. Again, we're going to go over perp trading crypto for cash flow. On Monday, we'll get into other trading strategies. Sure, if anything big happens between now and Friday, we'll cover that as well. Look forward to seeing you then. Bye.